Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, December 13th, and this is the weekly market update. A disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, let's get into it. So I thought this was interesting this week. I put the title of this slide and this video this week, not QE. QE is back. Um, here's a article from Bloomberg talking about Treasury. Well, basically the Fed's going to start buying back 40 billion a month in uh, T-bills, which are the short-term securities that the Treasury issues and I'll get into some of the quotes that Powell made, but this is the Bestnet opens door to a form of fiscal-led QE. Of course, this is what they're going to do. Okay, they take moderate breaks, maybe here and there. They don't want to come out and say we just print money. They're not going to say that. Okay, that's not what they're going to say. So they're going to couch it in all of these technical terms that they think are misleading people. Liquidity, short-term liquidity. Yeah, nothing short-term. I remember back when Bernanke started this whole QE thing. It was supposed to be short-term. Has it been short-term? Bottom line is you have an empire in decline that spends more money than it takes in every year, and it's not going to stop doing that until the dollar is destroyed. Now, these are provocative statements, I understand, and it doesn't mean it's tradable Monday, but that's the trend. It doesn't matter who you vote for, Republican, Democrat, Biden, Trump, Newsom, whoever. Okay. This is what you're going to get. You're going to get more spending, more nonsense, and your standard of living is going to go down over time if you don't understand what's going on. It's the Cantillon effect. Okay. And they're going to continue to do this till they can't do it anymore, until there's a monetary reset at some point. And then rinse and repeat, start all over again for another 100 years. I don't know what comes after this, but over time, there's been different monetary resets. And the bottom line is because we have disingenuous, dishonest people running things. Okay. This oligarchy that we live under. Okay. And we have no control of it. And so these people lie constantly. What are they supposed to do? Just come out and tell the truth? They're not going to do that. Okay. They're going to try to keep the game going as long as they can, keep the plates in the air, and then pass it on to the next, you know, conglomeration of clowns. And then they'll keep going until it hits a wall. And then, then there'll be a panic. And so your job is to take care of your family, to survive this. And so first thing that you have to do is understand what's going on. Again, that doesn't mean that you go out Monday and say, okay, well, all the things that benefit from money printing are going to go up. This is like a slow fever that never goes away. It's a chronic disease. So there'll be ebbs and flows, right? There'll be times of overexuberance in some of these metals markets or things that benefit from, and then there'll be pullbacks. And though you have to understand, though, that the general trend is up and to the right because the underlying factors, characteristics that cause this inflation, that cause this money to flow into certain things, isn't going away. In fact, it's probably going to accelerate. And so I just want to go down to the last blurb here on this Bloomberg uh, discussion. Increasing bill issuance, if the Treasury goes down this route, it's not definitional quantitative easing, given that, other things equal, it does not result in the Fed's balance sheet expanding. However, decreasing the weighted average maturity of U.S. debt effectively increases its moneyness. Due to scarcity, it could push buyers of long-term debt to buy riskier assets, which leads to a de facto form of fiscal-led QE. It's just QE by another name. Okay. That's what it is. And so we know, again, from Cantillon's discussion of this, who's closest to the king into the gold, or in modern times, who's closest to the money printer wins. Okay, asset inflation. This is how it works. If you're just a schnook, schlubbing a job 9 to 5 for a paycheck, you're the loser. unless you're in some special field that gets jacked up pay rates. But the average nook is standing around going, "Gee, I don't understand why my cost of living doesn't go down. I don't understand why I'm falling, blah, blah, blah." Get on TikTok and cry that they can't affordability crisis. They have no clue. No discussion about the central bank, the malfeasance that goes on, deficit spending. Milton Friedman, there's all kinds of videos you can watch him. He explains this, okay? But people don't want to accept it. Grocery stores are greedy. I mean, all of the things, nobody has a clue what's really going on. Don't be that person, please. Chairman Powell comments on T-bill purchases. They cut rates. So here we go. QT was stopped, remember, okay, on December 1st, I believe. They This is like the third rate cut now, so we're in a rate cutting cycle. While inflation, they never hit their target, remember, 2%. There was a chart that Ronnie Stoffel had in Gold We Trust guy uh, that over the last 50 or 60 years, not one country has hit the 2% inflation target. Okay. Switzerland's the only country that came close, and it was 2.2. The average was between 5 and 10% inflation because of this fiat currency. Okay. Everybody, because fiat currency, the governments love this, right? The oligarchy loves this because you can spend money, you can steal money, you can create money out of thin air. You can have a defense budget. You can have wars. You can have a welfare state. You can cream off a certain amount, and you don't have to really raise taxes on anybody because you can just go into debt and have the Treasury buy its own debt, create money, have the Federal Reserve create money out of thin air. That's basically what they do. And people will get on the comments and dispute this. This is exactly what's been going on. Debasement of the currency. Okay. And you saw a massive slug of it during the pandemic, which really put it in people's face. Because before it was 2, 3% a year, nobody was thinking about it. But that compounds over a lifetime. It's called boiling a frog. You don't just throw a frog into a boiling pot of water, it'll jump out. You put the frog into the water and slowly turn the heat up, and it never understands it's being boiled. So, getting to Chairman Powell's comments on T-bill purchases, Powell emphasized that these purchases are for, quote, reserve management purposes. What does that mean? Nobody knows what these guys just say stuff, okay? To ensure an ample supply of reserves and support the effective control of the policy rate. The goal is to keep the, quote, plumbing of the financial system functioning properly and alleviate recent pressures in money markets. He went to great lengths to distinguish these actions from broader monetary policy QE, which is used to stimulate the economy. Uh-huh. Okay. The purchases started December 12th, which was yesterday. And while they may remain elevated for a, quote, few months, the size is expected to decline thereafter, depending on market conditions. Okay, well, we'll see. We'll see. I mean, do you believe these people? They say all kinds of stuff. Does anybody go back and check after the fact? I mean, 40 billion a month is $500 billion a year. And what's to say they don't accelerate it? This is incremental steps back to, monetization of the debt, basically. They got to roll 9 trillion next year, guys. I've been talking about this for a couple of years, staring them in the face. They got to roll 9 trillion in US debt next year. You think they're going to be able to? They're setting the stage for the QE that's necessary to monetize that debt because they're not going to be able to sell that kind of debt into a real market. Rates will spike, and that'll be the end of the economy. And so they are setting the stage. They are getting you acclimated to what's coming down the pipeline, which is Treasury purchases of securities and monetization of the debt, because they got to roll this debt and they can't do it. If they try to sell it, rates will spike. So it goes on, it says, despite Powell's technical explanation, some market analysts and former Fed officials view the 40 billion in purchases as a significant stimulative step, effectively a de facto restart of quantitative easing, especially since it immediately followed the end of QT. Size of the purchases, which was larger than some expected, triggered revisions in Wall Street Bank's debt forecast and influenced market conditions. Yeah, metals Silver spiked, I think went up to like 65 in the futures market. Of course, it pulled back on profit taking. Gold, I think, went over 4,300. I've got multiple metals making new highs, breaking out all over the place. Uh, yeah, that's what happens. The signals, signal sent, signal received. So get ready for it, guys, because this isn't going away. If you think that you're in a $30 trillion economy, you could sell $9 trillion, you can roll 9 trillion in Treasury debt next year, uh, without interest rates, long rates spiking, you're nuts. And it's interesting to me because all of these officials like Bessent and all these rest of these people, basically oligarchy, tools of the oligarchy, a Soros acolyte, were making fun of Janet Yellen when you know, she shifted from selling long-term debt to short-term debt. I was critical of that. You're running the United States fiscal house treasury market like a hedge fund. Everything's short-term. So you can't term out the debt. One of the little tricks, if you notice, they pulled this a couple times too, where they would sell treasury securities and then buy or short-term securities and then which were lower interest rate and then buy back the long term. Remember where they were doing some of those exercises? See how the market would react? So I think they're setting the stage, that's my personal opinion, for some massive QE in the next year or so. It's going to be interesting. We'll see. We'll see if they hold to their word. It's just going to last a few months because there's a little hiccup in the money markets. Got to maintain the plumbing. We'll see. The metals will tell us. Okay, they will sniff this out so fast. Uh, we'll see how they react. But this is what I think it is, then we're probably looking at much higher gold and silver, much higher prices across the board. I think I wrote an article about the Cantillon effect. I think it was the February 2024 issue. It was in one of the Actionable Intelligence Alert. I wrote a big monthly thing about how it works, how it eventually winds itself down into, starts out with asset prices and then eventually finds itself in price inflation with consumer goods. And of course, the average schnook, the chew clerk, the average Joe has no idea, no discussion ever about the Federal Reserve and what it's doing, why it's there, how it manipulates interest rates, how it creates money out of thin air. All and no discussion about this ever. How it monetizes debt and in its role in inflation and enabling this nonsense. So this is the problem, right? This is from Ronnie Stoffel, incrementum. Everyone, this is like Bastiat talked about. Everyone trying to, well, I said love it. I meant to write live off everyone else. Here's government spending as a percent of GDP, 1800 to 2022. Look what's happened in the post-World War II liberal, neoliberal New World Order. Okay. Government spending goes up. They've been buying you. They've been making you dependent. So we've reached the end of the road. Can't have government spending be 100% of GDP. How's that going to work? In some of these countries, you're at 50%, over 50%. The United States itself is between like 35%. This is ridiculous. This is the problem in the West. And this is, now they've got themselves in a jackpot. Population's in decline. I'm not going to get into why that is. That's a long, multi-hour discussion. Fertility rates down, all that. Okay. Okay. So how do we maintain these welfare states? How do we pay for these promises? We don't have enough workers. We don't have enough people paying in. Bring in more bodies because we don't believe that people are different around the world or that IQ matters or that culture matters. People are people, round pegs are round pegs. Get them in here, get them paying, and that's how we'll fix this. Blew up in their face. The whole thing is just a big clown world mess. But ultimately, people have to look at themselves in the mirror. This is what you voted for. This is what you wanted. You were told and you believed it that you could live, not you people necessarily listening to this, but the average person, that you could live off everybody else by just going to the ballot box and that you were entitled to that. Well, people are going to find out that that's not the case. Here it is. The dollar has been in a century-long bear market. Here it is. I've shown this all the time. Look what gold's done relative to the dollar. Okay. Now, is this a fair representation? But gives you, it's a visual impact to show you how the dollar has lost value over time. Okay. And how gold has maintained its value. Gold hasn't necessarily went up. It's just held its purchasing power. The dollar has went down against gold. That's basically what has happened. And here it is. U.S. deficit spending exploded after dollar was unpegged from gold. This is 1971. The gold windows closed. Look what happened. Hey, we found a new magic money tree. We can just, spend money we don't have and create it out of thin air. And there was this little blurb here when Newt Gingrich and Clinton, you know, did their little thing. But since then, look at it. And look, during the financial crisis, it exploded. And during the pandemic, this was the final nail in the coffin. And now you're just going to run, you're going to run $2 trillion between $1 and $2 trillion deficits every year ad infinitum. You're at $38 trillion in total debt, adding 2 trillion a year. In 5 years, you're at 50 trillion, basically. This is, doesn't matter who you elect. This is going to happen. And you haven't had a real recession yet. Again, what happens when you have another big recession or some economic calamity and they have to spend more money again? You're going to have a 5, 6, 7, $10 trillion deficit. At what point does the dollar buckle under this? Yeah, this is why I'm bullish on commodities. One of the reasons, and also why I'm bullish on gold long term. So let's shift over to uranium. Goldman Sachs came out this week with it revised its uranium demand materially higher versus its prior forecast. Here's a chart. This is Exhibit 1. We revised our demand forecast incrementally higher while adjusting production profiles for supply. So you see basically this blue and gray line are this is the blue's the revised supply. This is the gray's the previous supply forecast. It hasn't changed much. You see that we're here 2026 basically. And then you see the revised demand here, and this is the previous demand. So you see that demand's moving higher, just like we said, because why? Everybody's going nuclear around the world. You need more fuel. And again, 10 years, it's like, you talk about a cat has, or a dog is, every year's 10 years, but, in nuclear, 10 years is nothing, okay, in the nuclear fuel cycle, okay? Where are the new mines coming from? We need a material. They will come. They will get built. They will provide uranium. They will provide an abundance of uranium. Uranium is not in shortage in the Earth's crust. It will take billions of dollars of investment. It will require a much higher uranium price so that people that have the capital say, wow, this is a market we need to be involved with. And they haven't even thought about getting involved in it yet because the uranium price really hasn't spiked yet. So if uranium's $150, $200 a pound or higher, I can guarantee you a lot of money will come into the market, but it won't just be a light switch flipped. It will take years to develop these mines. It will take years to bring them online, to find the people to work in them, get the mining engineers that know about uranium, know how to produce uranium, know how to create a uranium mine, people that know how to build these things and work in them. You don't just flip a switch. And every day that goes by, we don't see any announcements of any new mines being built. Yet we see week after week more announcements of new reactors being built, at least around the world, not necessarily here in the US, but slowly but surely happening. So, do you see, this is, I think, something that requires patience. Again, people have told me, I know many people that, I don't know many, I know some people that have become quite wealthy investing in uranium during this bull market. Let's just leave it at that. Okay. And they're going to continue to get wealthier. You just have to have patience. And you have to, again, creating a investable method or a way to take advantage of it is the trick. Going out and buying the promoted Uranium Junior probably isn't the best way to do that. Again, we're at Actionable Intelligence. We're looking to beat the S&P because most people should just put their money into a low-cost index fund because they don't have the emotional EQ, they don't have the intellect, the time, the resources, the desire to be a market research person. Uh, so yet, if you're going to, then you have to find themes that are going to outperform. And then you have to have the conviction to understand why that theme's going to outperform and then the patience to let it play out. I mean, this is one of the biggest investment firms revising their demand higher, supply is going down. I mean, look at the right side of this chart. Supply goes down, demand goes up. You you could tell me in the comments, I guess, what major mines are coming on in the next year or two that are going to close this gap because it ain't happening. We're finally at the inflection point where this is going to start manifesting itself uh, pretty highly. And I think that the demand forecasts are still understated because it's just going to keep happening. Going to have more and more reactors being put on the board. So this is interesting. This is Goldman Sachs, uh, another or from several sources, but this is off Twitter. One new reactor started construction in the month of November. Number of nuclear reactors under construction. Well, there's China. They have 30 reactors under construction. Then you go down the line, India, Russia, Egypt, Turkey, Korea, Bangladesh, Ukraine, UK, Argentina, Brazil, Iran, Slovakia, Pakistan. Majority of these countries are BRICS countries, okay, with a few exceptions, Slovakia, UK, Argentina, Ukraine. You see what's happening in the global South and East? Where's the US, by the way, on here? Now, I know that we're bringing some reactors, mothballed ones, back in, and we're, talking about building them. And I know Fermi out in Abilene's trying to start construction on this huge data center thing. But where's the actual foundation that's been laid for a reactor? Where our reactors that we're proposing to build aren't even going to start construction until 2030. In the global game going forward, it's about who has the cheapest energy. China has the cheapest energy. They're all in across the board. If you don't understand that, then you're going to get left behind. Places like the UK and Germany, these places that are, uh, making political choices to make energy more expensive, California, they're going to suffer. It's you just putting a major obstacle up that your competitors, it's an own goal. You have to understand that. And most people don't understand energy and how it affects everything and the price of energy, the availability of energy, all of these things. And it requires planning. And it's difficult to do that. I hate to say this, I've mentioned it many times. Some people don't like this. And our form of government, people like to laud it. So wonderful. You can't do long-term planning. It's not, especially in the polarized environment we're in now, in a 4 and 2 year election cycle. How are you going to plan long-term? Can't find any common ground around nuclear power. So on the left, it satisfies their global warming fetish, and then on the right, the thing you can't find any common ground, and so we shift back and forth to these big, huge shifts back and forth every 4 years. In the meanwhile, China's building 30. We should be building 100 reactors, 100 of them right now. Crash course. President Trump should be out there stumping. He should be standing there. This new reactor behind me just restarted. We're going to do this. We're going to do that. All you got is Chris Wright out there. Once in a while, you see an article. This is the interstate highway system being built. The spillover effects of that. This is the space program. This is America. This is what we do. We build things. We're not going to let these other countries. India's building 6 reactors. Russia, who's so incompetent, it has to get microchips out of washing machines, is building 5. Actually, they're building more because in a lot of these places, Ross Adams basically building these reactors for places like Egypt and Bangladesh, but it's another story. Even Argentina is building 1 reactor. What are we doing? Yeah, USA, give me another Miller Lite. I mean, this is ridiculous. But we'll see. This is interesting. Indian pension funds, the country of India, can now buy gold and silver ETFs, actually. So it says the Pension Fund Regulatory and Development Authority has revised its investment guidelines, enabling pension funds to diversify further by investing in the top 250 listed stocks by market capitalization and in commodity exchange traded ETFs, including gold and silver. These changes take effect immediately. Along with equities, the regulator also approved investment in commodity ETFs, specifically those tracking gold and silver. This marks the first time that pension funds in India will have direct exposure to commodities through regulated investment instruments. This change is considered a significant step in modernizing India's pension system and is expected to create a new structural source of demand in the global precious metals market. Yeah, I agree. This is a country that's, wealth is growing over time. Pension fund system is going to grow over time, and they're allocating money to gold and silver. How many pension funds in the US are allocating money to gold and silver? I don't know, but probably not that much. That's how out of favor gold and silver is still in the West. They're still buying, Mag 7 stocks, private equity investments, government bonds. This is the sea change I think will eventually happen in many places as more and more capital flows into gold and silver because the recognition that it's the inflation that we're going to have in the fiat monetary system, how it's stumbling forward and not really working for folks. So this is just another demand that's coming to the market, another set of demand that's coming to the market. And Indians, obviously, not to be negative towards them, but they have a real affinity for precious metals. They have. It's a cultural thing there, okay? It's a store of wealth, okay? As it is in many countries. Uh-oh, the octopus is long silver. So evidently, the synopsis off Twitter, article synopsis. Basically, JP Morgan is going long on silver and making history. The bank now holds over 750 million ounces of physical silver, the largest stockpile in the world. In just 6 weeks, it added 21 million ounces. That's a staggering move in a market already under pressure. Between June and October, JP Morgan reportedly sold off its entire 200 million ounce paper short position. This freed cash to acquire physical silver, leaving the bank long in both physical and paper silver for the first time ever. Experts say this is a rare and powerful market position. Probably, if this is true and accurate, probably the real reason silver has spiked recently. Okay. Um, Look, they don't get involved in something unless it's going to unless they're going to make money. These people always make money. Okay, this should be telling you something. So again, if you look at the gold and silver ratio, let's see, what is it now? If gold is let me do a quick calculation here in real time. Let's say gold's 4,300, and silver is about 60. So the gold and silver ratio is 71. Historically, uh, silver doesn't really top until we get down to like 40 or 30. Now, in the Earth's crust, it's 8 to 1. And typically over time, it's been 15 to 1, where silver is traded relative to gold. I'm not saying it's going to get that low, but I don't think you have a top in silver when silver ratio is 70 to 1. Okay. And remember, if gold moves higher, it's going to drag silver even higher. Okay. Remember what happens in a precious metals bull market. Silver ultimately, silver ultimately ends up being taking over in the bull market and spiking at some point. Okay. So we're not there yet, but I think that's going to happen. Uh, Again, I don't really try to get too speculative in the Actionable Intelligence Alert newsletter. I've been trying to get away from being more speculative, but in the Discord, we did talk about, a couple of silver stocks, which, have been benefiting. And, there's plenty of people on Twitter and people that offer newsletters specific for gold and silver juniors. I don't want to get into that and become turn the newsletter into a tout service, but I do think it's reasonable to speculate in some of these junior silver market. You know, going out and buying a basket of stocks of silver miners that are bringing some silver production online in a raging silver bull market probably isn't a bad idea to allocate some capital to them. You know, when you see the JP Morgan, who never loses money basically for the most part, I'm going to say never, but they're usually on the right side of this stuff. And you can see, I can guarantee you, if they've got this kind of positioning on, they're definitely jilling silver to their clients. And they have access to, high net worth individuals, family offices, pension funds, the whole shebang. And so, yeah, I think that, we're not even near the end of the bull market in gold and silver. Platinum's kind of a stealth bull market. No one's really talking about 1756 on platinum. Um, got a really interesting stock. I think somebody sniffed it out last week in the comments, but an Actionable Intelligence Alert, you get the copper miner, platinum group metal miner. It's out of favor, and I think is probably has some of the best world-class mines. Again, taking advantage, the idea that platinum, think about this. I guess the thought is I'm trying to say is, historically, platinum has traded at a premium to gold. Gold's at 4,300, platinum's at 1,700. The idea was, well, EVs, are going to take over. Internal combustion engines are on the way out. We don't need catalytic converters, yada, yada, yada. Hence, platinum's going into a bear market. And the interesting point that people didn't think about was, how realistic was that? And we now find that it's not as realistic as we thought, because actually these hybrids are actually on the increase and are a viable alternative to electric vehicles for range, where you still have an internal combustion engine and a small one and a battery. And they require even more platinum group metals than a regular internal combustion engine. So um, again, be wary, goes back to what we've said before, be wary of these, you know, uh, research firms that, get onto a theme and then extrapolate it out linearly, for the next decade or two. Uh, I've found that most of the time that doesn't come true. Something comes in that blows that theory up. And that's kind of what happened. And that's why platinum's kind of been ignored. And now it's in a stealth bull market. And most people don't even know what the price of platinum is. If you go on and ask the average person, they have no idea what the price of platinum is. A lot of people that are investors, even in precious metals, don't know that platinum group metals are in a bull market. They don't know the fundamentals behind it. Where does the majority of platinum group metals come from? Well, South Africa. Uh, that's, high costs, lack of a new investment, power issues, unstable government. This is an issue. So, anyways, something to keep an eye on. Remember we were buying platinum way back when, even last year for under $1,000 an ounce, physical platinum. So I wanted to show this. This is just I like to show these visuals when they come along. This is just a comparison chart of like XME, which is metals and mining, right? Index ETF versus the QQQ. I put S&P, but it's actually the QQQ. And you can see that, since basically this XME was basically came to life, you know, or after the last bull market, basically, in commodities, which ended in about 2009, 2010, something like that. We had this collapse in metals prices cyclically, and the NASDAQ has, QQQ has outperformed. Well, we've had basically a decade of outperformance of the NASDAQ, and now it looks like it may be shifting. Um, Again, you can ascribe anything you want to lines on a chart. This is uh, something that you have to be wary of sometimes. But I do think it's an interesting exercise because charts are valuable, because at some point, if you see a formation starting to build, it should pique your interest. And at some point, if you break higher, if you do break a trend line and you do kind of say, well, the fundamentals kind of, you know, back up what I'm seeing on this chart, maybe there's something happening here. And these reversals can be multi-year. That's the point I'm saying. There's going to be a multi-year bull market in metals. And I think you're just going to do a lot better in commodities and resource stocks over the next decade than you are in the tech stocks. I just think that's just how it's going to be for all the reasons that we've discussed in the newsletter and on these weekly market updates. Underinvestment, money creation. Uh, Again, it's not going to be like the last commodity bull market where China was just a black hole sucking in everything in the aughts. You know, but we still do have, a lot of demand from the global South and East as these countries industrialize, urbanize, get wealthier. They require higher. There's people that have done studies. You could probably go get AI to do this. Maybe I'll do it as an exercise. What's the per capita demand at certain GDP levels for copper, and then extrapolate that into current production, put it in a spreadsheet. Well, if this happens, this will happen. It's kind of an interesting intellectual exercise to see what can happen because, again, like oil, like many things, copper, there's been underinvestment there. The largest copper producer, Chile, is struggling to maintain production. A lot of the top-notch copper mines are exhausting or coming to the end of their lives. Where's the new mines going to come from? Well, they're going to be deeper. They're going to be grades have be less. They're going to be more difficult. So the cost is going to go up. And so that's where the opportunity. Can you find the company here or there that has a low cost operation or has this big ore body that it found that it can have multi-year production from at a cost substantially less than the spot price? Again, I think copper is going to go a lot higher over the next couple of years. Uh, I mean, you got guys out there like Lee Goring at Goring and Rosenzweig, $10 copper. Okay, that's what he said is a possibility. I think you can make the case for that. And so I think this is going to be across the board. I think it's going to be shocking of how high a lot of these things go during this bull market. So I kind of laugh because in the Actionable Intelligence Alert newsletter, we've really taken advantage of the fact that most people that in the US or in the West think China is uninvestable. It's funny because this is for example, China's goods trade surplus tops $1 trillion. China's overall trade surplus surged 21% year over year to a record $1.1 trillion. And this is in the context of exports to the US down double digits. And so what has happened? What I've been reporting on, they're exporting to everybody else in the world. Okay. You don't want to do business with us? Okay. We have rising middle classes around the world. We'll do business with the global South and East. This idea, we don't have any cards to play. It's interesting. We're having all these tariffs. Oh, we're going to tariff you. We're going to do this. Oh, we're going to cut off all the rare earth metals. Oops. Well, we're going to have a 1 year hiatus on the tariffs till we figure this out. We're going to have a crash course, Bessonette said. We're going to fix this problem. Okay. We're going to do this. We're going to make China do this. We're going to make China. That doesn't mean I'm advocating for China. I'm telling you what the reality of the world is. And most people don't want to accept reality. USA, USA, USA. Give me another Miller Lite and a hot dog. I mean, come on, guys. Don't you see what's happening around the world? Power is shifting. Economic power, political power. Things are shifting away from the West to the East because we are not doing what's necessary. Okay. And so, again, the things that I'm invested in aren't necessarily directly in China, but they are proxies and they're doing very well because China was uninvestable. Again, go into Google Trends, put certain things in there and track them. Google will send you an email. I put in there a keyword, uninvestable. It sends me emails. I'm not getting emails anymore about China being uninvestable. People are starting to put money into China. Okay. Things have moved quite a bit, but still undervalued relative to its size in the world GDP. What's uninvestable now? The UK. We're eventually going to have a change in government there. Keir Starmer is in single digits popularity. They're out during the next election. And then, it'll be investable again. Hopefully, we'll see what takes its place. This is why you got to track these things. You put it on a watch list and you say, okay, well, here's where we're going to go with this. Things change, perceptions change. Remember, a change in perception is the whole basis of the Actionable Intelligence Alert newsletter. The whole basis is something going from the perception of being totally out of favor to just a slight change from horrible to slightly bad can be hundreds of percent return. So, China's going to collapse. I know the property bubble. I get it. Blah, 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 blah. I get it. Doesn't mean China doesn't have problems. Doesn't mean I don't know what's going on there. I don't know about their banking system, but I do know one thing that a lot of things that they're doing is things that we should be doing, like they don't have the kind of resources we have. Again, we have 15, 20, $25 trillion in mineral wealth right in the continental United States, not counting Canada and Latin America, our sphere of influence. Probably 100 trillion in resources. Why are we not exploiting this? Why are we not developing this? Why is China building 30 nuclear reactors currently and we don't have one under construction? Does that make sense to you? Is that in a race of economic supremacy? Who do you think's going to win that? Well, we roll in chips for how long? They're graduating more engineers every year than we have people in college. I don't know if that's an accurate stat. I shouldn't say that, but quite a bit more. You don't this chauvinism and basically racism. Well, they can't develop anything. They just steal everything. You can keep believing this, people. Okay, you're leaving money on the table. That's what I'm telling you. So if you have to ban exports, if you have to try to play these little games that we play in the West, instead of just going out and building things and competing, guess what? You're going to lose. Go look up what the CEO of Ford Motor Company said when he returned from China. He said we can't compete with these people. I was privy to a conference call talking about some folks, named investors that went to China, went to the BYD, drove the cars, met with the management. We can't compete with them. That's why we're not going to let those cars in the United States unless we tariff them. Because certainly the UAW and the isn't going to, with the pension liabilities and the healthcare liabilities and all the things in this country uh, and the lack of innovation in Detroit, they can't compete with these people, so they need tariffs. And so overall, you can say what you want, but with all the tariffs and everything else, this is just 11 months. They have a record trade surplus. What we have, that should tell you something. China's gold reserves top 311 billion. Actually, this is what they've reported, but I suggest they're quite a bit more. Why are they accumulating so much gold? Does anybody understand why that might be happening? Probably because they understand that a new monetary regime is coming. If you keep threatening them all the time, then we're not going to participate in the dollar system. Slowly but surely, the leaders of the BRICS countries are building an alternative to what's the SWIFT system, the global, basically what amounts to the Atlanticist hegemon is fading. Okay, and they're going to. Okay, you don't want us to participate. You made that clear. You just saw what happened on Friday in the EU. Okay. They're going to seize Russia's assets. They're going to steal them. Okay. And what did they do? They said, well, any country in the EU could have stopped that, and Hungary would have vetoed it. Okay. Disregard that. We don't need a majority anymore. They change the rules whenever they have to suit themselves. And so do you think that, the BRICS countries, China, Saudi, all these countries, Russia, India are watching this and saying to themselves, no, we're not going to keep our assets in the West. These people are unstable. Yeah, Ursula von der Leyen in her, personal little Barbie house of the EU, no one's stopping her. The member countries, okay, just making these decrees and people are going along with them. The project must continue, the EU project above all else. And, it's kind of like, I think it was Cicero in the uh, forget the Latin term, but it was Carthage must be destroyed. Russia must be destroyed. This is like they're so It's like they Brendel flied their whole being into the EU project and this Russia must be destroyed quest. Okay. Well, people are watching this and saying, well, if you're going to bend all the rules, if you're going to steal people's money, we're not going to deal with you. It's just that simple. And, you can have the people in the US and the people in Europe, 700, 800 million people. Well, the rest of the 7.2 billion people in the world, don't need to deal with the 10% that have lost their minds. And that's why they're fading. That's why we're fading away. Okay. We're trying to hold on to an empire, trying to hold on to a way of thinking that is not correct for the current circumstances in the world. You could get away with that 20, 30, 40 years ago. These countries were nothing. They were backwards. That's not the case anymore, folks. And so they're not buying all this gold because I guarantee it's a lot higher. They're buying it because there's a new monetary regime coming. I don't know what it is, but something's coming to replace the current system. And I think it's going to involve gold. So this is a clown world segment. I think it was like a couple, maybe a month or two ago. I've always been fascinated with this Ivanpah out in the desert out there. I think it's in Nevada or Eastern California desert. I can't remember exactly where it's called. I think it's in California. Yeah, it's in California. Um, with the mirrors that focus the sun. This thing's been around forever. It never really performed like it was supposed to boondoggle, focus the solar energy to this molten salt, and it's supposed to create steam cycle for a turbine, and the thing never really performed. They had to introduce natural gas fired co-firing to get the thing to work properly. It's just been a boondoggle. So they were going to kill it. I reported it on this channel. They're going to kill this thing. It's a flop. Get rid of it. Well, here comes Governor Newsom, Mr. Affordability, Mr. The haircut, uh, all the women swoon over him, probably your next president. And of course, he had his minions resurrect this flop. And he talking, and his main thing he's running on is affordability. So he wants to raise your energy prices by resurrecting this flop. But on the other hand, he's talking about affordability. These people hate you. Don't you understand that? They hate you. So this is from Robert Bryce, robertbryce.substack.com. Excellent energy blog or Substack. I read it. I subscribe to it. This guy knows a lot. Should take a subscription. I don't get anything for saying that, but if you want to know about energy, this guy deep dives it, and he's really plugged in. He's got some good videos on YouTube about energy and energy policy and costs of energy, the whole shebang. Anyways, snippets from the article. Last week, Gavin Newsom appointees ordered the Ivanpah solar boondoggle to keep operating, which will cost California residents an extra $100 million per year. In January, Pacific Gas and Electric, California's largest utility, announced it was terminating power purchase agreements it signed 15 years ago, and the plant would be shuttering and dismantled. Reports show that PG&E has been paying about $180 per megawatt hour for the electricity from Ivanpah. That's a lot. Typically, $35, $40 a megawatt is what you see in a lot of places, gas turbines, stuff like that. They're paying $180 per megawatt. For comparison, new solar PV projects can produce power for $40 per megawatt hour. Thus, the California Public Utilities Commission commissioners, all appointed by Newsom, are requiring California ratepayers to pay a premium of $140 per megawatt hour for the juice from Ivanpah. Newsom, this is Robert Bryce. Newsom is all affordability, yet shuns natural. Well, I put this in here. He's all for affordability, yet shuns natural gas, which is the cheapest fuel available. Now, the argument is, well, they built transmission infrastructure out to the plant, and if we shut the plant down, then it will be abandoned in infrastructure. Yeah, that's what happens with boondoggles. It's wasted capital. Okay, this guy's going to be probably your next president. He's the front runner on the Democratic side. Okay, so you're going to get the guy that squandered. We don't know what happened to the billions of dollars that were supposed to cure homelessness. It has one of the largest homeless problems. the high-speed rail system from hell that was billions of dollars that I don't think they've built more than a mile of rail, not much. Okay. This boondoggle, this guy just says whatever he needs to say and relies on the hair and the smile to get by. And this is what the people want. And he's probably going to that worked in modern day US. Okay. That's what works. But it's all about affordability. Watch, that's what he's going to tell you. He's going to hit your, he's going to, he understands pain that you're going through, and he's all about affordability. Yep, sure is. Hey, people get what they deserve in life for the most part. That's all I can say. Okay, guys, that's it for this week. Appreciate it. We're over 15,000 subscribers on YouTube. I appreciate that. That's a major milestone. We just keep creeping up week after week. It's the tortoise and the hare, you know. So I appreciate the subscriptions. I appreciate the comments. I appreciate the likes. You guys, you know, best fans I ever. Really loyal fan base. It's so funny to me. It's not funny, but it makes an impact. It's impactful for me. It humbles me a little bit. Uh, Not a little bit, a lot. You know, if I am late with a video or if I don't have a video, people are like emailing me, messaging me, "Hey, what's up? What's going on?" So what I'm grateful for is people actually find this valuable. I thank you for that. Our Substack continues to grow substantially. We've many times made it on the bestseller list on Substack for finance. We've been in the rankings, I think as high as in the 20s, which is good. We're competing against some real top names. And so you guys are finding value in what we're saying, what we're doing here. The community that we've created on Facebook and in the Discord has been tremendous. Ideas have been generated there in both places for people. It's a really great community, and it's biases get checked, pushback, but for the most part, it's pretty civil. We don't really have many. Some nut jobs have come and gone, but this is to be expected. But overall, really great, and I really like what we've done here, and I do appreciate it, and hope for even more in the new year. All right, guys, that's it for this week. We'll talk to you next week. Thank you.